One thing that's interesting in the president's discussions about this is the trade deficit and all of that. It did help here. Not so much talk about what's going on with the budget deficit. We're going to be exploring that on and off a little bit here. Let's go to Market Watch's John Layfield, Gary B. Smith, former Obama economic advisor Austan Goolsbee. Austan, if I can begin with you, the one thing about a great quarterly number is, well, it's a great quarterly number. It's hard to repeat. You guys found that out. Obviously, George Bush found that out. What is it about sustaining strong quarterly numbers? What's the problem?
I don't know. I mean, this is a very good number. It follows on a quarter. The first quarter of this year was a pretty mediocre number. And when that came in and consumer spending grew less than 1% at an annual rate, a lot of people said it was from the weather. So if you get a down quarter from the weather or from something that's transitory, a lot of times you get a rebound in the following quarter, and vice versa. If you get a good quarter, then you get a rebound down. So in a way, that's the problem. But it's not really a problem. It's just a reflection that there's a lot of moving around. The numbers move around. Some months you're up, some months you're down, and so you tend to average out over a longer period.
All right, I guess if we were to just average things out for the next 2 quarters, Gary B. Smith, the view is that we'll average out 3% growth for this economy in the year. That's a bit of a leap, obviously, to make that assumption. I'm just going on the assumption of a 3% third quarter pickup, 2.9% fourth quarter pickup. I think that's the consensus. What if that's how we ended the year?
Well, if that's how we ended the year, it'd be fantastic. And what I think more importantly, kind of like we're seeing some of these earnings coming out, they're always a reflection of what happened, and people now start to listen to the guidance going forward. I think it's the same way with the GDP. We get a 3% growth this year. I think we're going to get higher next year. Remember, a lot of the tax cuts have not kicked in. A lot of the regulation cutting that Trump has done has not yet kicked in. I think everyone on the panel would agree the great unknown is what happened with tariffs. But even there, with what Trump has done with the EU, that may end up being more positive than negative. I think the economy is in great shape, on strong footing right now.
John Layfield, the markets had a shrugged reaction to this, maybe because they were expecting this, or actually maybe expecting whisper numbers that had a lot higher. What is going on here?
I think it's forecasting, as Gary B was talking about. I think the market expected somewhere in the low 4% range. They got exactly what they were expecting. I think we had a miss. I think the market would be down significantly. I think if it was higher, the market would be up a little bit, but not significantly, because they expected in the 4% range. I think the good thing going forward is inventories. You had about 1.43 inventories to sales a year ago. It's now 1.35. So inventories have been depleted. They have to be rebuilt now, and that is a good sign for GDP going forward.
Austan, when you look at this, this president said the tax cuts are the reason. They're a big chunk of that. Do you think tax cuts lifted the economy?
Only modestly. I noticed he didn't want to attribute the slow growth in the first quarter to the tax cuts. I think the jury's still out. There's good news and bad news from that. Most of the tax cut effect is still to come. So if you think that's going to be a big positive, that's still to come. It was sold as it's going to increase wages and increase capital investment. So far, you really haven't seen either of those come through. So I think we're still going to be hoping that we get that going forward.
Gary B., who might have rained on a parade here, and people will read political calculations here, but I noticed the president talking about the trade deficit again and again. He never mentions the budget deficit. He never mentions that he is overseeing back-to-back-to-back years that could go over, $1 trillion in red ink. Maybe we've just gotten used to it. He certainly made a bigger case when he was running for president, ignores it as president. What did you make of that?
Yeah, Neil, you just like to rain on the parade, don't you?
Yes, well, that's the way I roll.
Deficits out there are the big boogeyman, yes. But you know what? Every president has said that, when they're running for president and they're going to solve it, and it's just so easy not to solve it. It will hit one day. It will hit hard. I've often said, with you and on other shows, that we're heading more toward becoming Greece than, a Singapore or a Hong Kong. I hope that's not the case. I hope we right the ship, especially with entitlements. But for now, I'll take the good news that we have.
And so I don't want to be a naysayer here. I just always say this, and I think Austin go back to the Obama days. I did the same thing. But, John, I am just worried about a president fixated on trade deficits that in the scheme of things versus our overall budget deficits are, no pun intended, Trump change, if you will, even Trump change. So I'm wondering if he's not worried about that, and maybe he's talking about the growth that will come from tax cuts, and maybe that will materialize in more dramatic fashion. Maybe it takes care of that, but what do you make of it?
I think it's incredibly disappointing because it proves that he is indeed a politician. And I hate to say that because I'm rooting for the economy. I love the tax cuts. I think my good friend Austin, who I love very much, is a little bit wrong. Corporate earnings are up about 35 to 40% of that earning growth is attributed to the corporate earning tax. Now, wage growth has not seen that. But as far as the president and the deficit, there's no difference up there between Republicans and Democrats. If you take $1 trillion out of this economy and government spending, you're going to hurt it significantly. And whoever is the politician in charge at that point is probably not going to get reelected. That's why nobody does it. And it's disappointing to see that none of these guys have a vision for 20 years out. It's only a vision for the next election cycle, which is all of these politicians. There's no fiscal responsibility in D.C.
Okay, on that happy note, I'm going to drop it here. Guys, I want to thank you all very, very much.